everybody. We're going to talk about Colorado's historic preservation or historic rehabilitation tax credit. And so I always like to start off with, why are we here? Why are we even talking about this? So Colorado has incentives for building owners to rehabilitate historic structures. And the credits can be up to $1 million per year, depending on how much it costs to do the rehabilitation work. And the credits can be used by the building owners for their own Colorado tax return, or they can be sold for cash. So they're really relevant for anybody. Anybody who qualifies can get a benefit from it, whether they pay Colorado taxes or not. And we'll talk in a minute about how you qualify. So what are the qualifying buildings? What do you need to have for a building to qualify? So number one, it needs to be in the state of Colorado, which seems pretty obvious, but might as well just say it. Has to be at least 50 years old. It has to be landmarked on either the local, state, or national level. So if it's within a historic district, if it's in like on the National Register as a historic district and it's a contributing structure, that would count. If it's going to be landmarked at the local level, the local organization needs to be what's called a certified local government. And so each city or county can decide if they want to be a certified local government. So if they choose to do that, then they will be able to certify buildings as historic, and then that will allow that building to qualify for tax benefits. If they're not a local, let's say someone owns a building that's not in a certified local government, they would have to just get landmarked on either the state or national level. And this is what I mentioned a moment ago. It can be listed individually or as a contributing property within a district. And you don't have to actually be listed before you apply for the credits. You just have to be, you can be doing the application process at the same time you're doing the rehabilitation, and that's completely fine, so long as you are listed by the time you're finished and asking to have your credits issued. This should all make sense in a little bit as we talk about the different steps of the application process. But just for now, just know that if you're working with a building that has not already been listed, as long as they're working on it, they can still apply to reserve the tax credits. And then what is rehabilitation that we've been talking about? So it's been defined as the process of making a property useful through repairing it, altering it, or making additions, which unfortunately the additions don't qualify for tax credits. But what's important is preserving the features that are significant to its historic, architectural, and cultural values. So you can make a building useful, but you also need to preserve those areas that make it historic. So that's kind of in a nutshell. And then we've been talking about tax credits. So I just want to do a review of what is a tax credit. A tax credit is used against state taxes dollar for dollar. It's a lot like a gift certificate to the Department of Revenue to pay your tax bill. And they're more valuable than deductions. So some people are familiar with charitable contribution deductions. Those will reduce the amount of income that you're paying taxes on. These tax credits actually pay your tax bill. So they're very valuable. So I want to stop for a moment because I didn't mention, please ask questions all along the way. So if anyone has any questions about what we've already covered, I'd love to take a moment to take those. And you're welcome to either type them into the chat, and Dylan will be watching that to jump in and interrupt me, or you can just unmute yourself and holler out. So does anyone have any questions about these first couple of slides? Okay. So what are the requirements to qualify for the commercial historic tax credits? So I will just put a little footnote here and say there is a residential historic tax credit that is not able to be sold, so we don't work directly with it. But if you do have or know someone with a residential building, their home that is historic, that they'd like to do some rehabilitation work, History Colorado can definitely help them with the process of getting tax credits for that. But for today, we're going to talk about the commercial historic tax credits. So the first criteria is it has to be a commercial property, which is defined as it's income producing or available to produce income. So it doesn't have to be a 7-day-a-week business in the building. It could be something where it's a vacation rental. It could be something where it's rented out a handful of times a year for wedding venues. It can be used in those different ways, and that would be income producing. And you don't have to have already gotten your tenant in place. It just has to be available for a tenant at the time that you're applying to receive the tax credit. So when you're trying to get them issued, you need to have it in shape to where a tenant could move into it, but you don't have to actually have it rented out in order to be considered a commercial property. You can apply either as a property owner, or if you are in an urban area, you would need to have a lease that's at least 39 years. If you're in a rural area, you'd need a lease of at least 5 years. So you can be the tenant in either urban or rural areas, but you just have different lengths of lease terms. They want a long-term lease. They don't want a tenant who's in there for a year to be earning tax credits. You can be under contract to buy it and apply for the tax credits, and you can be a nonprofit. So there's a lot of ways to qualify for these tax credits. So the nonprofit could be any of those things. The property owner, they could have a lease, they could be under contract. So it's just kind of neat to know that nonprofits do qualify. Government agencies do not qualify. So we have had situations where a government agency owns the building, but they will lease it to their economic development authority, or they'll lease it to some kind of nonprofit, and then that nonprofit can apply for the tax credits. So there are some ways to work around it because of this very generous and varied kind of list of ways you can qualify. So what kinds of expenses qualify? So the first criteria is that you have to satisfy the Secretary of Interior standards. And unfortunately, the standards are very open to interpretation. They're not black and white, they're very gray, but there is guidance, and there's people who know a lot about this that can help you with the nuances. It can cover modernization. So if you're putting in an elevator to make it ADA accessible, that will qualify as long as it's being put in a way that doesn't destroy all the historic features. It can cover HVAC, new roofs. It's not just for making a building look pretty, which is pretty cool that this is available to do those things that are needed to make it a commercial building. It must be substantial, and for purposes of the Colorado tax credit, that's defined as at least a $20,000 expense. For the federal tax credits that we don't work with directly, and there's folks that can help you with those if you're interested, it's a lot different standard to qualify as substantial. But for this purpose, for the state tax credits, it just has to be $20,000 that you spend. Things that don't qualify: your soft costs, your legal and accounting costs will not qualify. The costs for hiring your architect do qualify, so those are qualifying. Landscaping doesn't qualify because it's not part of the building. And if you make an addition to the building, that does not qualify. And the addition could be, something added on to the side or the back, or even something that's added on below the building. If you dig out your basement and make it 3 feet deeper because you had a really shallow basement, that addition to the basement does not count. So that was a new one for me to learn about that. Any questions about any of those slides? Okay. So the Secretary of Interior standards. In general, they want you to protect and retain the things that make the property historic. If they're already damaged, or if they're already damaged, then repair it if possible. Then the next level down is to replace it in kind. So find another 110-year-old window to put in where your window has been broken. And then the last possibility is replacing it with something similar. And so this is a very case-by-case analysis. And so it's always good to ask questions early if you're trying to figure out if what you want to do with your building is going to qualify or not. And additions, and changes should not alter the building's character or integrity. So they will look at any additions that you're planning, although you will not earn tax credits for your additions. So your additions can't, overshadow the whole building and make it so that it doesn't look like a historic building anymore. So that has to be looked at carefully, but you don't get any credits for that addition. Okay, how's the program administered? This one is a little different than the other two tax credit programs that we work with, in that there's two agencies at the state that administer this program jointly. So History Colorado, their role is to review the architectural plans. Anything that has to do with history, they're going to be focusing on that. And then they partner with the Office of Economic Development and International Trade, or OEDIT, as it's a lot easier to say. They administer all of the paperwork side of the program. So they deal with all the dollars and cents and the application forms and all of that. It's funded by fees. So there are fees that you pay when you apply for the tax credits, as well as a fee when you have the credit issued to you. So we're going to start with how the urban credits are calculated. The urban ones are a little less generous than the rural ones. So for urban tax credits, you would receive 25% of the first $2 million in expenses, plus 20% of any expenses over $2 million, with a maximum credit of $1 million. That's kind of a little bit complicated and a mouthful, but I'm going to give you an example that will hopefully help clarify it. Now, if you're in a county that's been declared a disaster area in the last 6 years, you will get an additional 5%. So those will go to 30% of the first 2 million and 25% of expenses over 2 million. And just so you know, because of COVID, the entire state of Colorado has been declared a disaster area. So we're, a little over 2 years, maybe 2.5 years into that 6 years. So for the next 3.5 years, anywhere in Colorado will be considered a disaster area. Normally it's for floods and forest fires and things like that, but that was our disaster that we all had to deal with. So here's an example. So we're going to use an example of a non-disaster county, even though we know everyone is in a disaster area now, just for the math. So $3 million in qualified expenses. The first $2 million will be at 25%, which equals $500,000. The last $1 million will be at 20%, which gives you another $200,000 for a total of a $700,000 tax credit. So that's how, are there any questions on how the urban credits are calculated? Okay, we're going to move on to the rural. So for rural areas of Colorado, you receive 35% of the first $2 million in expenses and 30% of expenses over $2 million to a maximum credit of the same $1 million. So basically it's 10% higher. You don't also get the disaster on top of it. You either get the disaster 5% or the extra 10%. Pretty much anyone who's thinking would take the 10% over the 5%. So we just always assume you're going to take that. And so how do you know if you're in a rural community? So the way that's defined is that it's a community, either a city, municipality of under 50,000 people, or it's if you're in the unincorporated county, your county has less than 50,000 people in it. So 50,000 is the magic number, and there's a few little quirks around the Front Range where the Front Range counties and cities are all considered urban. So if you're in that area and you're not sure, we can definitely help you through that. But as a general rule, if your community is 50,000 or more, you're urban, and if it's under 50,000, you're rural. So here's our example. The same exact $3 million in qualified expenses. So the first 2 million are at 35%, which is 700,000. The next million is at 30%, which is 300,000, for a total credit of $1 million. So if you remember, I'll actually just go back. It'll take just a second. On the previous slide, the same 3 million in qualified expenses in an urban area without the disaster was 700,000. And as you'll see in a rural area, instead of 700,000, you get $1 million. So this was a really important feature of the 2018 legislation to give that extra kicker to the rural areas because they really have a lot more expenses. It's more expensive to bring people out to do the work, and they just really need more help with their economic development. We're all thriving for the most part on the Front Range, but that hasn't extended to all of our rural neighbors yet. So any questions about the rural calculation? Okay. So now we're going to talk a little bit about the application process. It's essentially a 3-step process. And the first is, creating an account with OEdit, and the qualifying questionnaire is the entry into this process. And that's a very simple questionnaire with about 9 or 10 questions in it that are very easy to answer. And if you answer them in a way that shows that you're qualified for these credits, your building's within the state of Colorado, it's over 50 years old, those kinds of things, then that will unlock the second step, which is the reservation application. And that one has a fee. It's not very much. It's either $250 or $500, depending on how big your project is. And that application is the most extensive of the 3 applications. And part of what our company does is help you through that. We'll use whatever documents you have already created to fill out as much of that application as we possibly can. And then whatever we can't find on our own, we'll get from you and we'll coordinate all that. But that's where you send pictures of the project before any work's done, a copy of the work plan, a copy of the construction drawings. And this is where History Colorado will be reviewing that application to really figure out whether the project qualifies under the Secretary of Interior standards. So they will review that within 90 days. And once you hear that your credits have been reserved, you know that they have approved the work plan that you put in there. So the last step, this is kind of an interim one, is as you're working on it, if it takes more than 18 months to finish your project, you will submit progress reports on a regular basis. The first one is due at 18 months. And then the last application, the third in the actual application process, is the issuance application. And that's where the project is completely finished. You've gotten your letter from your CPA that shows that they've reviewed all of your expenses and they all qualify, and you will ask to have the credit issued to you. And there is a 3% issuance fee. That 3% is 3% of the credit amount. So a $100,000 tax credit would have a $3,000 fee associated with it. That's where the big fees come in, but you don't have to pay that until you know that your credits have been approved, which does make it a little less painful. And that also has a 90-day period that the Office of Economic Development and International Trade has to issue that certificate to you. So any questions about the application process? Okay. There are $10 million in credits available each year to be reserved, and the applications for those reservations of credits are reviewed in the order that they receive them. If there's enough credits available that year, you will get your credits reserved immediately. If they've run out of credits for the year, you'll get put on a wait list. And that wait list, you can be on the wait list for up to 2 years. And that wait list, or the credit pool, gets replenished every January 1st. So on January 1st, they put in $10 million into the pool, and then those credits will get reserved. And if they're all reserved by September 25th, then whoever is qualified to be reserved just has to wait until January 1st when another 10 million gets released to be in the credit pool. So when you're trying to decide which construction expenses will qualify, you can include expenses up to 24 months in the past from when you apply for your reservation. And you must spend at least 20% of your expenses within 18 months after your reservation. So you can look backwards. You can you just go ahead and apply without any expenses incurred, but you need to know that you're going to do a substantial amount of work, 20% of your work within 18 months, or else you'll get kicked back out for not having used your reserve credits quickly enough, or not having done enough on your project quickly enough. So here are some limitations. You can only do 1 credit per property per year. So if you're doing a number of phases on your property, you can do that. You just need to obviously make it logical. You don't want to do half of the, you don't want to paint half of the room or something like that. But each of the phases have to be completed before you start the next one. So that's very clear where your phases start and end. And then your first phase has to allow the building to be occupied and used for a commercial purpose. So if your first phase is just stabilizing the building, but it's not safe yet for people to be able to inhabit it, that would not qualify for this credit, because this credit is designed to increase the commercial use of these buildings. And so when it can't be used yet, it would not qualify. So you would need to get to the point of being able to lease that out and have someone use that for the first phase. The same owner can apply for more than 1 property in the same year. So if you happen to own 4 different historic buildings and you want to do projects on all 4 of them, that sounds like a lot of work, but you're allowed to apply for 4 tax credits for your 4 buildings. Final steps to receive the tax credit. The issuance application, which is after you've finished doing all the work, that will include the cost and expense certification, which is audited by a CPA. So that's where you have to hire an accountant to look at it and say, here's all my receipts, here's what I've said qualifies for the rehabilitation credits, what are the qualified expenditures, and they approve that and write a letter saying that they've reviewed it and that it's correct. At that same time, you need to have evidence that you've completed the rehabilitation work, which will typically be after photos of whatever it was you said you were going to work on. And then you request credits. Now, I know this has probably never happened to anyone where they did a construction project and it ended up costing more than they had budgeted. But if that does happen, which sadly happens a lot, you can still get credits for those additional expenses. They'll be put in as a new application for the overage, and that will take another 90 days for you to receive, unless we're on a wait list, and then it could take longer. But you do still get those credits even if you go over your budget. So any questions about receiving the credits before we go into what to do with the credits that you've already received? Okay, great. We'll keep moving on. Once you receive the credits, what can you do with them? So the first and probably the best thing to do with it is use them for your own Colorado tax bill. And you have up to 10 years to use them up. If you don't have a large enough Colorado tax bill to use up all of your credits, you can transfer them to another taxpayer. And that's what our company does. We have buyers who want to buy tax credits, and you will typically net about 85% of the face value of the credit. So we'll do a little example here. You have $1 million tax credit, you got the full thing, and let's say you're a nonprofit, so you're not going to use any of them for your Colorado tax bill because you don't have a Colorado tax bill. Then you could sell those for 85% and receive $850,000 for those credits. So this is really why these credits are relevant to anybody. Anyone who qualifies should get these credits, and if they can't use them themselves, sell them. And if you're the rare person who doesn't need any money, I say donate it to the charity of your choice and let them have the money, because somebody could definitely use that money. So rules regarding the sale of the credits. So the credits can be sold up to April 15th for use against the buyer's tax liability for the previous year. So I'll give an example, so this hopefully makes sense. You get a credit issued October 28th, 2022. The credits can be sold up till April 15th of next year, and the buyer can use them on their 2022 taxes. So we get really busy come March and April as people are getting their credits sold for the buyers to use them on their taxes. And I just want to remind everyone, you can sell all of your credits or just sell some and keep the rest to use for your own tax bill. It's always good to have credits for your own tax bill if you have a tax bill. So why do people buy these credits? So they purchase them at a discount. And with our company, the rate varies based on the time of year and how far up the wait list they want to be and things like that. And the credits are applied towards their taxes dollar for dollar. If they plan ahead, they don't need to make their quarterly payments. So that's kind of a nice way that they can have their money working for them all year long and then buy credits, shortly before April 15th. And then they didn't have their money just sitting at the state collecting dust. So for example, they have a $100,000 tax liability. So they buy a $100,000 tax credit. And in October, if they want to be at the top of our wait list, they would be paying 93% or $93,000, and they would save $7,000 on their tax bill. So why would they work with a tax credit broker? You probably noticed those numbers were different. So the buyer is paying $93,000 in our example, and for the same project, the seller would be receiving $85,000 or 85%. The difference between the two is how the brokers get paid. So what the heck do these brokers do to earn that money? So we help with the application process. So every one of those 3 steps we talked about, we will prepare those applications for the property owner, and we will also help with ensuring that the periodic reports get turned in if they aren't finished in the first 18 months, as well as helping to find accountants if they need an accountant for doing the audit and all those kinds of things. So anything that has to do with it that we can possibly help with, we will. And then we have a wait list of qualified buyers who are ready and willing to buy these credits. Typically, once someone is ready to sell, we can have the deal closed and the money to them within 2 to 3 weeks. So that's a bonus, is that we have those buyers ready to go. And we guide everyone through the process and just take care of those details. So we draft the closing documents and we prepare all the documents that need to go to OEdit for the paperwork to document the transfer. So that's why tax credit brokers exist. Do you need to have a tax credit broker? No, you can do it on your own. You can do the applications on your own, and you can, if you want to sell credits, you can find your own buyer and do it yourself. But if you do want some help, we're here, and that's what we love to do. So there's as I mentioned earlier, there's an annual tax credit cap of $10 million per year for this program. And it's split evenly between the small and the large projects. The legislature didn't want, it's $1 million per transaction. They didn't want there to only be 10 projects done per year. They wanted to make sure that the smaller projects had a chunk of the money as well. So $5 million goes into the large project fund and $5 million goes into the small project fund. And what we've seen typically is that the large projects get used up more quickly. And so I think probably for 2022, those are all full. Last time, usually they get filled up partway through the year. And so if you're applying now for $1 million tax credit, you'll probably get put on the wait list and you'll get that in January. But the smaller projects, there's still room for those. So if you have a small project, you can reserve that and get it reserved before the end of this year, because there is still room in the credit pool for that. But it's really not a big deal because it only matters when you finish your project, and these large projects are not going to get done in just a few months. So it wouldn't hurt anybody to be on a wait list and get a tax credit reserved in 2023. But just so you know how that works, and if you do receive notice that you're on the wait list, you understand that it's not a very scary place to be. So sunset provisions, there was a new bill that was signed in May of 2018. It doesn't feel that new anymore, but it is the newest one we had, and it extended the program through the end of 2029. So most likely we'll be going back to the legislature in about 5 years or so to be asking for it to be extended again. But the nice part is we don't have to do that for a little while. So we're very happy about that. And a quick recap, we have extremely generous tools for Colorado building owners that allow credits for commercial historic rehabilitation. So again, it has to be commercial and it has to follow the Secretary of Interior standards. The credits can be used towards someone's tax bill or they can be sold for cash. So I'm going to just leave the screen up for a minute for people to ask questions and also to make sure you have Dylan's, oh, I didn't spell connection correctly. Well, you know that there should be an N there. So I'll fix that in a few minutes. But Dylan works really closely with our application process, and he is more up to date on all the ins and outs of preparing the applications than I am. And if you choose to work with us, he'll be working with you very closely, as will Bianca, on supporting everything we need to do to get the applications into the state, following up to make sure that everything's being done on time and those kinds of things. So I'm going to open it up to any kind of questions that you might have and look forward to hearing from you. I'm going to go ahead and stop sharing so I can see if anyone has their cameras on. Hi. Does anyone have any questions?
I do.
Great. Melissa, what's your question?
Hi, for those of you I haven't met, I'm Melissa. I work with the Boulder County Open Space Program with the conservation easement properties in Boulder County. And I'm really just familiar with the conservation easement tax credit. I used to work with it, full disclosure. But so this is good. I didn't know anything about this, so thank you. And I also went on your website, which is of course always super helpful. And there's so much good information on there on this to help back up what you just went over. One of the questions I have, because I'm thinking about the people that I might work with or even just talk with in my work in other departments or whatnot, is more information on commercial use. And I know you said that sounds like that's defined and decided by the state what that is. So Dylan, I don't know if maybe that's a question for you, but just sort of that threshold to entry, like how do I find out what commercial use means, like so someone knows that they even qualify?
Yeah, so that's a really good question. There's actually two historic preservation tax credit programs, the commercial program that we just talked about and a residential historic tax credit program, which applies if you own your own historic home and want to put some work into that. The main difference between those is the residential tax credits are capped at $50,000 per project and they're not transferable. So they're just for use on your own taxes. So that's why we focus on the commercial ones. But the good news is that the state's definition of commercial is very broad. It really applies to any sort of business activity, having any sort of building that's available to being leased, even if it's a home, say, or an apartment building, as long as it's being leased out to other tenants, not yourself or your immediate family. That qualifies as a commercial building as well. So if it is a residential type building, they have the owner sign a statement saying that they're not doing the rehabilitation with the intent to live in it or have their family live in it in the foreseeable future.
Yeah, and I know you did in the presentation to go over that there was the residential, and I'm looking through where can I find maybe on the website too more information on that residential one? Because I'm seeing a lot of commercial, and I think that's probably where I'm going to run into more people that would be interested.
Yeah, you can find good information on that through History Colorado. They have a lot of information on the residential program as well. But again, that's a smaller tax credit, and it's only for individuals to use on their own taxes. They can't sell it to anyone else.
So it's not transferable, which makes sense why it's not the focus of your work, because you don't need a broker.
Right, we
Yeah.
don't get to help them with it. Yes.
Okay, that makes a lot of
However,
sense.
I own a historic house, so if I ever put a bunch of money into it, I'm definitely going to apply and get some tax
real?
credits. Yes.
Nice. Okay, so historycolorado.org, is that where you're saying they'll have information? Okay.
They'll have information for sure. And we can always, you can always email us as well. And I know we have some information it's just not on our website as well.
Okay.
But we have some information that we can share too.
Well, that's really helpful to know about the commercial definition being broad, because I know, in our county land use code, it's very specific. And so that's nice to know that people should look into it and try to figure out if they qualify, because it sounds like the door is wide open to more than just a truly commercial by definition of your local code building or use. Yeah.
Another area that might be really relevant to you, Melissa, is if someone has historic barns. I mean, since the barn is supporting
Very
their
classic.
agricultural operation, they have said verbally to us that those are commercial buildings. If you're using it for equipment or animal care and things like that, that is commercial, not just for your own, horses, but if you're leasing horses.
Oh, it's fascinating.
Or boarding horses is what I should say, not leasing them. If you're boarding horses or you're renting your property out to a tenant, or if you're storing your equipment to plant and harvest your products on your property, all of those things, those kinds of buildings would qualify too. And so they would need to get it landmarked if it hasn't already been landmarked. So that's sometimes a place where people will choose not to go there. But if they're fine with getting it landmarked, then that would be a way they could qualify for doing work on those beautiful old barns.
That's fascinating. I mean, that's actually where I could see a lot of potential happening with the landowners I work with. And then one more question following up on that. The best next step, if I am talking to somebody and they're landmarked and they, for example, have a barn that fulfills some of these things, what would be, I know that they can always contact you, because I send people over to you all the time for the conservation easement, donation and tax credit conversation. Is that a good place to start? Would it also just be to kind of figure out if they even can, if they really could qualify and they really could apply and make that effort to try to get this? Would you be a good starting place, or would you suggest they start somewhere else?
They start with us. Dylan can talk through it with them, and then he can get them hooked up with, if we think we need to schedule a meeting with History Colorado, we'd love to participate in that meeting and help facilitate that. If we need to get them connected to historical architects, we have contacts we can connect them with. So we would be happy to just kind of be that first conversation, because I know it's sometimes hard to know, how do you find the right architect, and that might be more than you want to go into just to see if you even qualify. We'd be so happy to do that.
That's great. I mean, that shouldn't surprise me at all, because that's how your company does business. But that's a relief. That's wonderful to know that someone could start there and just kind of get taken care of to figure out if it's the right fit.
Yeah, and the really cool thing about this program that I've found is that History Colorado and the OEdit are both really approachable and open to talking about projects. So if it's a project that's clearly rehabilitation, clearly fits, we can just get started on doing applications. But if people want to figure out the details, are still figuring out exactly what they want to do, History Colorado especially is more than willing to provide their input on the best way to structure a project, the best way to go about an application, what they're really looking for in terms of the historic rehabilitation. So they're really approachable and like to talk before the projects get started.
And you said, and I just figured this out, you said OEdit, but that seems to be the Office of Economic Development International Trade. Is that the acronym?
Yes.
Okay.
Yes.
I got
such a mouthful.
I got it. No, that's better. OEdit. That's funny. Okay, great. Thank you. That's
really
super helpful.
Funny acronym.
That's fantastic. Thank you. I'll mute myself so others can ask questions.
Thanks, Melissa. Stephanie and Emma, do either of you have any questions you'd like to ask?
I guess, Ariel, my one question, and I'm not there, I don't think quite yet, is you have to have a historic designation on the property before you can do anything. I'm assuming, is that right?
No, you don't. Dylan, did you want to answer that one?
Yeah, you do not need to have it designated before you get started with this whole process. You need to have a building that's at least 50 years old so that it's eligible for designation. And then you can go ahead and get your tax credits reserved before the property or building is actually designated. But by the time the project has finished and you're doing the issuance request application at the end, that's where you need to be designated before they'll actually go ahead and issue the tax credits. But to get started with the process, you don't need to have that designation.
Good to know. Thank you. And I'm assuming I was a little bit unclear on the commercial versus residential. Ariel, you know my property.
Mhm.
And that we do have a 501c3 that leases the buildings, but we
Mhm.
also live in the buildings. So there's a residential component. Is that complicated? What does that do?
It is complicated. That is complicated. I think that would be a perfect example of where we would go to History Colorado and OEdit and say, let's sit down and talk about what's going on here and which of the buildings are going to qualify, and just lay it all out on the table so that there isn't any miscommunication or confusion, and we know exactly how they're going to interpret that.
Okay, great. Thank you.
Yeah.
Yeah, it's interesting. That might help with, there's some glass replacement, windows, right? Those are the kinds of,
Exactly.
yeah, great.
Yeah, it's really good for the things that aren't very sexy. You know, you can always apply for the historic fund grants. And I didn't have this in the PowerPoint, but the neat thing is if you get a state historic fund grant, you get credits on top of the grant money. So if you get a $100,000 grant and you spend $100,000, if you're in a rural area, you get 35,000 back as a tax credit for that. It's pretty darn cool.
Wow.
But you know, those are competitive, and you have to have a project that scores high with the reviewers. This one lets you do things that are just not super exciting, like replacing windows, but so essential. So if you've got broken windows or you have things that need repairing and it's not going to really get people jumping up and down, it doesn't matter. It still qualifies and you still get the tax credits.
Great.
As long as you hit that minimum expense of $20,000
Yes.
to get into the program. And the really cool thing is we see projects of so many different scales. We see projects that have spent $25,000 on windows and a new roof, and then we see projects that spend $10 million doing the interior, exterior, foundations, roofs, floors, everything you can think of. So it's a really broad, and that's where they've split it into the big and small too, to make sure that those smaller projects have tax credits available to them too.
Awesome.
I think it was maybe Melissa that said this about, at least from my perspective, this kind of being probably most relevant for the residential buildings, and thinking about working with individual landowners as part of our work with Palmer, as a land trust. But I'm wondering if there are any restrictions on kind of combining these historic credits with conservation tax credits, and are there individual caps on what someone can receive from the two programs? Can those be combined or no?
They can definitely be combined because they're covering very different activities. So we are also looking into working with a historical organization to allow conservation easements to be put on historic buildings, just on a building. So, at Palmer, obviously you guys are working with properties that have a lot of land, and then they may have historic buildings as well. And so that's completely fine for them to earn their state tax credits for conserving the land and agreeing not to develop it. And then if they also want to rehabilitate a building that is historic, then they could earn these credits in addition. The more unique area for Colorado is to, when someone's fixing up a building like Union Station, for example, like there's no protections that, I may be wrong, there might be some private protections on Union Station, but Larimer Square, there were no protections on Larimer Square. And about 4 years ago, there was a big, uprising in Denver because they were talking about, the owners of Larimer Square at that time were talking about putting up huge office buildings, in the middle of Larimer Square, which would have completely destroyed the historic integrity of that site. And there was nothing to stop it other than zoning in the city of Denver. Unfortunately, for historic, people who support historic preservation, there were city council people elected who chose not to allow that building to be built. But if there had been a conservation easement on that building or on that site, which is a very different kind of conservation easement than we're all used to in the land preservation world, then there would have been no worry about a threat of putting a huge skyrise in the middle of a historic, block. So that's something that there are currently no land trusts or no qualified holders that work with historic buildings specifically that are certified by the Division of Conservation. However, there's one that's in the process of getting certified. So once that happens, we'll be able to put conservation easements on just a building and ensure that that building will never get torn down or modified or alterations done to it that would destroy its historic integrity. So that's kind of a little different, and that would still allow, there's two totally separate things. One is permanently protecting the building, the other is actually fixing up the building. So even in that situation, you could get two separate credits for two separate activities on the same property.
Interesting. And can you talk a little bit about the process if a building is not designated at the local, state, or federal level? How long does, I imagine it varies by municipality if you're doing it at the local level, but what is that process typically like?
Yeah. Dylan, do you have much to add on that one? You're welcome to go first if you've got some points, and then I have a little bit of information, but I don't have a lot.
Yeah, you pretty much, whether it's local, state, or federal, the actual application and designation process is a little different for each one, but pretty much involves describing the historic nature of the building, what it is that makes it historic, what the period of significance is. This is an important building in the 20s, or this was an important building in the 50s. Here's what you can see on the building, this brick line or this roof line or this exterior or these windows or these floors are sort of characteristic of that era. And that's what, people can walk up and see the historic nature of the building. So it involved lots of photos, some written description of the building's history, and then preparing a whole packet that goes to a reviewing authority, whether that's local, state, or federal.
And there's consultants that do that. So there are, I guess it would be called historians. I'm not sure if there's another name for them, but there are folks that do that for a living that know how to do that we could put you in touch with if that's something that you needed and wanted to do. But I would also say that typically the local landmarking goes faster because they have more frequent meetings. The state and federal are done kind of in tandem. They both go through the State Historic Preservation Office, which is at History Colorado. They'll start there and be reviewed by the same people. And then the hearings, I believe, are on the same days, but they only have those hearings either somewhere between 2 and 4 times a year. I'm not sure if it's the exact number, but it's only very infrequently. So depending on the cycle of when you need to have it turned in to be at the hearing, you may be looking at 6 to 9 months to get through that process just because of when meetings are scheduled.
Okay, and at least for this program, is there any difference in the incentives about if a building is designated at the local, state, or federal level? Okay.
Yeah.
Perfect.
All the same. Yeah. Great questions.
It just has to be one of them.
Right.
Any other questions?
Does this credit tend to get used up in each year? What's the demand, I guess, is what I'm wondering.
Yeah, what's really neat about this credit that I wish was the case for the other credits, and maybe it's something to think about for the future, is if they don't use up all the credits in a given year, they roll over to the next year. So if you look at our newsletter when we send it out, when we describe this credit, we do it a little differently because there's a total of, I think right now it's 65 million from the inception of the program till now. And so they can reserve up to that full 65 million. And then only 37 million of the 65 have been actually issued. So again, you know, they can reserve them for those particular years, but it may take you 5 years to actually use it, you know, to finish the project and get it issued to you. So credits stay in the reservation stage for a really long time in this program because there's so much that has to be done in the construction process. So it's often the large ones will get waitlisted, but the small ones, I don't know if they've ever been put on a wait list. I feel like there's always been room on the small ones. Is that right?
It takes a lot of small projects to get to the 5
Okay.
million
Yeah, great.
per year amount. So, and then every January 1st, they get their fund replenished again. So,
Wow.
Yes,
This
I think
is
they
really
really
great.
picked the numbers correctly. I feel like the 10 million a year is working for now, which is great. Anything else? Well, thank you, everyone. It was a small group, but really lively. I'm so glad you all had questions. We got to have more of a conversation. This was really fun.